News from ABG Shipyard, and now from there, let's shift our attention to the commodities here. And first of all, again, in terms of oil prices, again there has been a decline in the oil prices. Primarily, again, what actually we heard from the EIA, the output actually was up 23% since mid 2016. The inventory, again, that sort of news was not positive for the markets. The oil prices declined. Gold prices, again, a good decline was being seen. In fact, gold prices, zinc, copper, on the agri side also coffee, there was a sort of negative trend in the commodities here, and again that was the sort of reflected also with the dollar here, a slight uptick in dollar and then also decline in the gold, silver as a proxy to dollar, but then also base metals, zinc in particular, consecutive sessions of declines here. Let's try and understand what is happening in the markets here and what should be the good strategies which you should be deploying in the markets at present from our guest today, Prathamesh Malia, the Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking, and Tapan Patel, the Associate Vice President at LKB Securities. Gentlemen, welcome to the show. Prathamesh, going to you first. What's happening in the gold and silver? I want to start first with the precious metals here, primarily because what is happening here is it's a very range-bound trade which is happening over the last few sessions, but again dollar has been all over the places. So how do you see gold and silver? I was just seeing last three sort of sessions data from the ETFs here. That is not showing many material change here. But over the last 1 month, in February especially, the ETFs actually, they have seen very large net inflows, and that's a huge change from the last 5 to 6 months here. So are we seeing some incremental interest coming back into precious metals here?
Good afternoon, Piyush. No, not really. I think precious metals would be dampener from here on, especially after the tariff duty that's been imposed by US President. But saying that comment, I think the investment demand also is not really catching up. But besides that, I also have one thing to add on, wherein especially yesterday, wherein comments from ECB chief commenting about gradual monetary tightening is something which has resulted into weaker euro and stronger dollar, which in turn has resulted into pressure on commodities. I think that is what would drive lower precious metals. I think gold and silver would trade low from here on. I think 30,000 is what we are looking at as far as MCX prices goes, and as far as silver prices, I think 38,200 is what we are looking at. So I would sell at higher levels on both gold and silver.
Right, again that's the word coming here. But Prathamesh, one more question here would be that if again physical demand has not picked up, both China and India data, if you look at the physical demand, that has been very, very weak. In fact, on the dealer levels, again discounts actually have increased in India on the India physical gold here. But when I look at the ETFs, that's showing me a net inflow here. If I look at the hedge funds, that's not actually giving me any major signs of excitement here. You're just saying on the gold prices, the trend is not looking that great, primarily because of dollar here. Then the question here is why ETFs are actually looking at net inflows here?
I think the net inflows in the ETF is really a confusing sign, wherein there's a lackluster movement in gold prices. I think ETF is also cannot be taken as a benchmark from here if you're just looking at the current data set. But then ETF data is something which you would possibly play a long-term bet and would not place that on a shorter-term side when looking for a trade for 2 to 3 trading sessions. But taking that into factor, I think ETF you'll have to discount that bit and look for other factors which are there in play, especially the tariff duties, the other side of investment demand which is not picking up, stronger dollar, and all the factors which are combining into possible weakness in precious metals.
Right, and what's the word on the silver here? Like we just had the sell call on the gold from your side, we just showed on the screen. What's the word on silver here? And depending on the gold silver ratio, any sort of trade which you think could be prevalent here?
I think gold silver ratio is almost at possibly the top point around 80 mark, and whenever it has hit the 80 mark, prices have corrected. I think correction is due in this counter as well. So silver, I think, would possibly move towards 38,000 mark. So even I would be shorting silver at these levels.
Right, Prathamesh, what's your opinion here? Because we definitely actually have not seen the last of the news coming on trade wars, last on the duties here. I think we are going to hear more about different sort of protectionist measures. I think Mr. Trump was indicating in one of the conversations we were showing to our viewers today that he actually is looking at all the duties, and he wants to put reciprocal duties on all the countries which actually are putting higher duties versus US here. So that tells me that we are bracing ourselves for trade wars in the future here. What's your perception on the sort of fluctuation dollar here? And when I'm talking dollar, basically because it affects all the commodities here. So what's the take there?
I think this move by the US is definitely going to have an impact on the Asian nations and specifically in China per se, because I mean that's the nation wherein the US has most of the trade surplus with. So it is a direct impact on China, and because of it you have seen a short-term impact on the currency, dollar especially, but then this would be factored out, and over a period of time I think dollar index is moving towards strengthening. I think a rate hike factor is what the markets would be very keenly observing on. All this short-term uncertainties with regards to tariffs would soon be phased out gradually, and I think there are some concessions that would possibly be seen on the countries which trade with US. So all in all, I think the near-term uncertainty remains with regards to tariff duties being imposed on aluminum and steel. I think with this factor in place, metals is something which would really face pressure, and that is what happening in the last 3 trading sessions. So I think metals are something which would be short from here on.
Right, actually, Pratmesh, that's a strong statement. And also, Pratmesh, coming to you, while I want to take your view on the copper and zinc both here, but then also before actually we talk on that, the steel prices actually are down 4% in the Asia exchange here, and that usually points to a fact that there would be some selling happening in the nickel also. Also some effect comes in the iron also later on with a lag here. What's your take on the nickel and what is happening in terms of selling on the Asia trade here, on steel here, on copper here? So what's the overall take there?
I think the tariff duties really had an impact, and that can be seen on the Shanghai exchange, wherein iron ore prices are down in today's session, and for last 3 trading sessions you have nickel prices are down on the Shanghai exchange, and both these metals are key ingredients as far as steel goes. So I think this would possibly create a near-term correction in nickel. I think 840 and 832 are two possible levels where you can see on nickel. 860 is what it is currently trading at. I think nickel would again be short. As far as zinc goes, I think 210 it is what is currently trading at. It is continuously trading weaker for last 8 to 9 trading sessions. I think 202 is where possibly zinc should take some bit of breather. So I think even zinc would be short at current levels 210, possible lower targets towards 202, while as far as lead goes, I think we should avoid this counter for the time being on the basis of news factors per se, which are really not driving the current fundamental movements. So I think I would avoid a lead. I would take short call on nickel. I would take short call on zinc. I would short on copper. Short on copper, the target would be lower towards 440 followed by 432. Current price trading at around 447, 448 marks. So I would this would be possibly the entry point. 452 would be the stop. Target lower towards 440 followed by 432.
Well, Pratmesh, is this the fact that perhaps zinc is also used to actually galvanize steel here? So again, like nickel, there is a bit of zinc which is also being used in the steel also. But broadly, that's not the only use for zinc here. Why there has been a much higher correction in the zinc metal here? Because at one point of time, some days back, we were talking about, yes, zinc actually is one metal where there is very tight supply. It was trading at almost multi-year high levels. From there again, the correction has been very sharp. What has changed for the zinc metal here?
I think, Piyush, if you're really talking about the broad-based fundamental factors, the inventory still stands at 8-year lows, which you really cannot roll out this fact. But then taking into consideration the one-side move in nickel, I think this tariff duty imposed is something which is really not gone as far as zinc prices as well as nickel prices are concerned, and hence correction in both metals. I think this correction would remain from here on for next 3 to 4 4 trading sessions until in India zinc prices reaches around 200 mark, while nickel reaches around 830, 832 mark. So I think I would be short on both these metals, taking into consideration the sentiment that is driven on account of tariffs.
Prathamesh, coming to you first here. What are you reading into the weather forecast from the US authorities recently? The natural gas prices have started reacting to it. And if I look at more data here, the Papua New Guinea, again, that sort of quake has triggered LNG supply disruption also. In terms of natural gas prices, what's the outlook and what is happening here?
Piyush, I think in the US it's the end of winter, March. So I think from here on inventories would start to build up, which would actually create a pressure on prices. So I am not bullish on natural gas. I think prices for the next 7 to 8 trading sessions are seen to be moving downward towards 160 mark, and I think I would short natural gas at current levels, and I would add on all the continuously adding this particular till it reaches 160, wherein I see prices stabilizing. So I would short natural gas, taking into consideration the weather forecast, and yes, continuous build up of inventories that would happen from here on. So short on natural gas.
Right. Prathamesh, what do you make out of inventory data? Was it too bearish? Why the oil prices actually slipped? And number two, because we trade in the range of $5 here, what do you make out in terms of strategy here?
I think crude is possibly headed down from here on. I think a possible move of $2.5 is what we're looking at immediately in the next 3 to 4 trading sessions. As far as WTI crude is concerned, it's trading at close to 60 mark. I think the possible next near-term targets would be around $57, which is a move of $3 on the lower side. As far as Indian market is concerned, I think 3,850 and 3,800 are two possible levels that you can see on crude. So I think I would short at this current levels, which is around 3,900, 3,940 mark. So I think I would be bearish on crude as well.
Right. So again, Prathamesh is bearish. In fact, Prathamesh is sounding to me bearish on most of the commodities on a lighter note here. I thank all the guests here. That at present in Brent, hedge fund long positions to the shorts, then the ratio of 14:1. Look at the amount of optimism at present hedge funds they have in oil prices. So while again we are trading the range, so as our guests are telling you that perhaps strategies are for actually shorting the crude oil, but the range is primarily because actually there are no sort of major short positions by the hedge funds at present. They remain actually long by a large amount here. Thanks a lot, gentlemen, for all the insights and the strategies into how we should be playing all the oil prices, precious metals and base metals there. With that, it's a wrap on this edition of the Commodity Trade. News and updates, they're going to continue on the other side of a very short break. Thank you so much for watching us.